Hello and welcome. You're watching Closing Trades here on ET Now. Plenty of buzzers. Those are flashing at the bottom of your screen. Some of them earnings candidates, the likes of the likes of Federal Bank, which has come out with numbers. But before that, let's quickly have a look at how the Nifty is shaping up. Essentially, we're seeing a decent day of trade on the index. We're holding up fairly well, 0.7% higher. Mind you, the indicative was we would have a very muted day of trade. That's not how it's played out. In fact, we've gone from strength to strength, and the VIX has cooled off from the highs of the day as well. So we're up around 175 odd points. That's really the texture. In terms of the Nifty candidates actually doing very well, and it's some of the IT names which are really standing out. 4.5% higher on Tech Mahindra, TCS up 3, Geo Finance is the other one. Again, numbers coming out, strong numbers, 3% higher. Then there's Kotak, HUL, Eicher Motors and the like. Some of those are buzzers. Infi also up nearly 2% in trade today. So that's really the tilt. The breadth also is positive, 2:1 on the advanced decline. Hindalco, Wipro, again on the back of numbers. Cipla, all bucking the trend, all of them lower by 1% plus. Max Health and DRL are the other casualties within the Nifty pack. Again, the contribution is chunkier from some of the larger cap names. RIL, HDFC Bank, ICICI Bank giving good contributions to the Nifty, giving that little bit of a boost to the index, which is what's holding up the index well in trade. The mid cap and the small caps, though, it's a totally different story, and that's exactly what I'm trying to point out. We're seeing that the large caps and some of the heavyweights are doing okay, which is why the Nifty has held up. The Nifty small cap is down 1%. The mid cap index is down 0.6%. So you're seeing the tilt of the trade towards the large caps and more so towards IT and banks. IT, 2% higher on the index itself. So we've seen a very good move on the index, except Coforge and Wipro, all stocks trending in the green and well in the green, essentially. What you're seeing on the Nifty Bank as well is around 0.9% in terms of gains. So very decent day again for the Nifty Bank. 5% higher on a Federal Bank. Kotak, ICICI, HDFC, all to come out with numbers. All three among the top 4 gainers on the banking index. And that's the other piece which is standing out. They're starting to build positions in some of these despite the numbers tomorrow. That shows some bit of strength and resilience. Axis Bank is the other one, 0.6% higher. Yes Bank and Can Bank are the two casualties from within the Nifty Bank. The Nifty 500 index, the tilt of the trade is completely different. It looks like a completely different market. 150 advances to 350 declines on the index that we're seeing, Nifty 500 index. So the tilt of the trade is totally different. SIAT, MV, Kirloskar Oil, Welspun, Vijaya Diagnostic are just some of the big casualties, all down over 5%. MV, if we can pull that one up, some profit booking playing out there. Welspun Corp, Kirloskar Oil, you're seeing some sharp moves on some of these names. Afcons, on the other hand, up 5%. Kalyan is up 4.5 odd percent. There's eClerx, there's Tech Mahindra. So the tilt of the trade even there seems to be IT. TCS is among the top 5 or top 7 to 8 gainers on the Nifty 500 index. That's how thin the breadth is with regard to the advanced decline. And a large part of that is IT, as you can see on your screen. Well, that's kind of sums it up in terms of how the trade is playing out. Let me go across to Rabinder. He's here with some of the stocks you want to keep on your radar for this afternoon's day of trade.
Well, as WeWork India is under pressure after reporting its Q1 FY27 earnings, and in Q1 FY27, company revenue grew by 27.7% on a yearly basis, and EBITDA has also saw an uptick of 30% on a yearly basis, but it was below the numbers are below the street estimate, and company higher finance cost and depreciation has impacted the company's profitability in Q1 of FY27, and on a quarter-on-quarter basis, company's occupancy has declined from 86.9% to 84.9% in Q1 of FY27. Federal Bank is also in action after reporting its Q1 FY27 earnings, where in this quarter company's profit grew by 36.5% on a yearly basis, and I grew by 26% on a yearly basis at rupees 2,946 crore. And Hexaware is also in focus, where Hexaware and Factory has partnered to bring agent native development to global enterprises. So back of this development, Hexaware is also in focus. Apart from this, on the back of order win, Servotech Renewable Power System is also in focus, where company has secured an order from Rural Development Department Uttar Pradesh for a 900 kV rooftop solar project across 12 locations. And this project include design, supply, installation, commissioning, and maintenance of a grid-connected hybrid rooftop solar system with a battery storage to be executed within 6 months. And lastly, on the back of positive brokerage, Eicher Motor is also in focus, where Kotak Security has come out with a note where they have upgraded the stock to add from the sell and hike target price rupees 7,950 as compared to earlier target price rupees 6,950. So back of the Eicher Motor is also in focus, and the stock is up around 2%.
Thank you so much for that, Ravinder. Some of the buzzers, CEAT is one of them. Let's go across. We spoke with management. Stock under pressure, 7% lower. Street has reacted negatively to the numbers. Investors closely tracking management's commentary on margins, demand trends, raw material costs, and outlook for coming quarters. We spoke with Mr. Kumar Subaya, who's the CFO at CEAT, to understand what the company expects in the quarters ahead. Listen in.
In quarter one, year on year, we grew by about strong double digits, around 18.5%. Based on the demand and based on how we see in terms of the impact of price increase on tires, we are optimistic with respect to double-digit kind of a growth. Last 3 years or so, we have been growing in double digits. In the previous 2 to 3 years, large portion of the growth came through volumes. In the current year, we expect the growth to be in the mix of, we'll have a combination of both price growth as well as volume growth. We expect raw material costs to go up by another 6-7%. By end of the quarter, because the price increases are happening in a staggered manner, okay, and by end of the quarter, we look forward to exiting the quarter maybe at a higher realization level with large amount of input costs being recovered. But margin point of view, we don't expect a sharp improvement. While look forward to some improvement, but not a sharp improvement.
Okay, so that's the interaction that we had with CEAT. H2 is when they see a bounce back in terms of margins. I think that's the other piece which is keeping the street cautious. They want to wait and watch as to how this plays out. 7.5% is quite a knock on that stock. WeWork India. They've seen steady growth in terms of the quarter. Revenue was up 28%, driven by workspace demand. We spoke with Karan Virwani, who's the managing director and CEO, and he believes that this is just the beginning of another growth cycle in terms of even capex that he foresees to be very healthy for the next 3 to 4 years. Listen in to what he had to say.
Same time last year, our margins were about 15%, but we ended with Q4 at about 23%, averaging roughly about 20.2% for the year. This quarter, we're already at 19.8% with a lot of that capacity coming up. So you can just kind of, look at the same trajectory for the coming few quarters and see that we'll actually end up with a margin expansion basically by Q4 of this year. The business is fully compounding and we are just, sort of in this growth phase. And I think for the next 3 to 4 years, you're going to see a very similar trend.
Okay, those are two managements that we spoke with, and stocks also buzzing. Let me take a short break. 6% low on WeWork India, by the way. Let me take a short break, come back with more. Plenty to speak about, including a couple of these stocks. We'll start to take views and market views from some of our guests coming on the channel. Stay with us. Welcome back, and we're joined by Satish Ramanathan of JM Financial Asset Management this afternoon. First off, to get his views with regard to the market. Satish, there's just so much sector churn. How should one play a market like this? Because the buy and hold investor will likely not be making enough money, and the temptation will always be rotate out of sectors which have run up, rotate into sectors which are not in favor, because they will come back into favor.
I think at this juncture, the only way to play the markets is to have a very balanced portfolio, whereby you are well represented across sectors and across cap curves as well, because there would be a situation where suddenly you find the stocks that you hold in a particular sector underperforming and then picking up the very next day or the next week as well. So there is no point in going extremely underweight on any sector per se, because as we can expect, India is on the cusp of a longer term growth trajectory. So there's hardly any situation of sector underperforming for a sustained period of time from a fundamental perspective.
Satish, what's the view with regard to IT in particular?
I think IT has bottomed out significantly. They are huge cash flow machines. At some point in time, the IT companies will have to decide as to whether they want to grow or start, refunding the money that they earn back to the shareholders. But I think there is opportunity for our IT giants to actually think out of the box and probably set up data centers themselves and grow rather than actually do share buybacks and pay out the money as dividends.
Okay. And do you think they can pivot in terms of their business models?
Yes, I think so. And what's also come through right now is that AI is actually not as cheap as many people thought, and that AI would actually be quite expensive. And therefore, a more hybrid blend of having AI with human intervention is the way forward.
Okay. And Satish, what would you tell the critics of this theory who come out and say that these companies haven't been able to pivot quick enough, especially to the AI disruption that's happening? Excuse me. Would you say that that these companies will eventually pivot, or they're just too big to fail?
No, I think they play a very important role in the global economy as well, because they do deal with all the Fortune 500 companies. There may be cycles of companies stagnating for periods of time, but that doesn't mean that you write them off because they didn't pivot for 3 months or 6 months. Clearly, the AI trade was something which was a bit of a surprise, the speed at which it happened. But it doesn't mean that Indian companies cannot adapt and adopt growth paradigms. We have seen this in the case of cloud. We have seen several technology shifts where Indian IT companies have come through bigger and stronger than the previous cycle. So I don't think we should be overly pessimistic here.
Okay. And Satish, what else in this market? What else is looking interesting? Because we're at the 24K mark, which means that we're roughly 10 odd % lower from the life highs that the Nifty has clocked. So it's a decent point of time to start adding, I would believe, not just to IT, but even to others.
I think the way forward is to actually pivot towards growth sectors, because ultimately Indian markets follow growth like no one else. If you look at the Nifty 50 earnings, the earnings actually doubled post-COVID, and Nifty 50 also doubled post-COVID. So that's over a 5 to 6 year time frame. And it may be that we overshot the target 2 years back and returns have been negligible on a 2 year basis. But things are turning around. We have the BFSI sector, which was a large segment of the index, not growing nearly as fast as what people expected. And that's actually picking up for one. The second thing that we also need to bear in mind is that some of the segments like manufacturing and commodities are little volatile. So that's the reason why the Nifty 50 did not break out. But I think we need to wait and watch for a breakout beyond the life high and then it growing from there.
Okay. Satish, how do you play consumer at a point of time like this? And what should the priority be even within consumption because it's so broad?
So I think consumption would be bottom led rather than looking at a macro theme. It can be across assets, asset ownership through two-wheelers, cars, passenger vehicles, etc. That's one part of the consumption paradigm. The second consumption paradigm is FMCG and its derivatives, be it modern retail, consumer consumption. The third is entertainment, spirits, and all of the discretionary consumption that we want to look at. So if we look at all these things, I think we should be looking at segments where there is growth.
And what therefore should one explore? Is it auto? Has the auto run up priced in a lot of the growth going forward? How should one look at consumption therefore? And how should one look at auto?
In the case of auto, I think there's been a bit of pent-up demand, primarily because of the fact that it was rather weak for 1.5 years. And post the GST cuts, there has been a revival which is continuing even today as we speak. And there's also the transition from EVs to EVs, which is another thing that is keeping the auto sector active. So I think the auto sector will continue to do reasonably well. The second aspect about the auto sector is what we see in terms of exports. Exports are doing reasonably well and will continue to do quite well going forward as well, given India's cost competitiveness.
Okay. And Satish, also curious to know, what would we be cautious on? Would defense be one of those spaces? Would cap goods be one of those spaces? Valuations continue to remain elevated for some of these names. But again, the stories are nearly a decade long story, right? I mean, and visibility is also pretty much there.
Yes, visibility, especially in the cap good space, is quite strong and something which we need to monitor. But one of the aspects about the cap good space is that it goes into extremes in terms of valuations. So one needs to be a little prudent and take the foot off the accelerator when things reach there and watch for a better entry point.
Okay. And what about defense, Satish?
Defense is extremely government specific and country specific.
Okay.
The macro theme is that India will continue to insource defense equipment significantly, but it's a little more cyclical than the cap goods trade in my view. So I would be allocating more towards cap goods rather than defense at this point in time.
How should one look at asset allocation at a point of time like this? The uncertainty is high, gold has fallen, inflation risks in the US keep gold under pressure. Silver as well has fallen quite sharply from the highs. You've got debt which hasn't given returns, at least to Indian investors, in a while now, of nothing outstanding. I mean, just 6-7 odd percent. So how should one look at asset allocation, Satish?
One of the things that the current environment tells us is that actually growth is back and back very strongly, whether it be US, whether it be Europe, or whether it be India as well. So I think when growth is back, typically equity assets tend to outperform stationary assets or defensive assets such as gold and silver. Gold and silver had a phenomenal 2025 on the back of fear of uncertainty. I think the uncertainty is easing a little bit and people are focusing on growth and how to get ahead, notwithstanding the Iran issues as well. but people are focusing on growth, and I think that's something which we need to worry about rather than looking at defensive assets at this juncture.
Okay, all right. Thank you so much, Satish, for coming in, giving us those views. It was good speaking with you.
Thank you very much. Bye.
All right. What we'll do is we'll slip in a very short break, come back, talk more, plenty to talk about. We've got a slew of earnings which will come through between today and tomorrow. We'll have nearly 35% of the Nifty, which will come out with numbers post-close today. And all of those reactions likely on Monday to try and break some of those down, try and give you a sense of what to expect on the other side. Stay with us.
Back with closing trades right here in ET now, and kudos to our market. Look at how Asia has closed in for the week with a 3% cut coming in for Shanghai. Hong Kong has lost nearly 2% in trade. Japan has knocked off nearly 2,700 points, and that's an over 4% of a downtick. Even if I look at what the US futures are up to, it's all a bloodbath there. It's a 2.25% slide that the NASDAQ futures are indicating right now. You've got the S&P futures lower by about 1% and the Dow futures as well down by 350 points as we speak right now. But our markets, resilient as they may be, holding up very, very smartly in trade in the context of the global weakness. And the breadth of the market, while it's favoring the declines a tad, there are lots of movers over here. Look at a TechM, for instance. That's been holding ground from the word go, 4.25% higher. Geo Financials, of course, has been a big mover. Kotak ahead of its numbers is holding up 3%. And look how strong Reliance is going into its numbers later this evening, 2% higher for Reliance Industries as we speak. Strength across HDFC Bank and ICICI Bank as well, which are due to report their numbers tomorrow. In fact, let me bring on board Mithali and understand what the street is anticipating from both these private banking majors.
Right, talking about the HDFC Bank and ICICI Bank, so the spotlight for this earnings season is going to be on the NIMs, the funding costs, as well as the management commentary, rather than just the headline numbers. Starting off first with HDFC Bank, the net profits are expected to grow nearly 9% on a yearly basis, but the base, it actually needs to be kept in gain, one-time IPO gain coming in from HDB Financial Services of nearly 9,128 odd crore rupees, which boosted their other income segment. Also, a company created their provisions of 10,700 crore rupees, the floating and contingent provisions, using this IPO income. As a result, this quarter's lower other income as well as the provisions, they will be largely base-driven effects. On margins front, the NIMs are expected to be largely broadly stable at around 3.3%, with a slight moderation that the streets are expecting due to the policy rate transmission as well as the seasonal agri-related interest reversals. The key monitorables for HDFC Bank this quarter will be the management commentary on the NIMS trajectory, the CASA recovery specifically, and also the cost of funds and the roadmap for improving their return on assets going forward. Now moving to ICICI Bank, so business momentum, it is expected to remain healthy for this quarter, with the loans expected to rise nearly 18%, 18.5% on a yearly basis and 4.1% on a quarterly basis, while the deposits are expected to rise nearly 15.2% yearly. The NIMs are likely to moderate further to around 4.2% as a lower policy rates, they flow through to the loan yields. The NII, that particular segment, it is expected to grow nearly 10% yearly, while the provisions, they will normalize with the exceptionally quarter four lower numbers, and keeping the profit growth relatively moderate after the normalization of the provisions. The key focus for ICICI will be the business growth momentum, the margin outlook by the management, as well as the strong loan growth, if it can sustain going ahead also without compromising the profitability.
Okay, thank you for that, Mithali. Let me go across to Aditya Shah. He's joining us, Hercules Advisors. Aditya, you track banks closely. HDFC Bank margins, will that be the larger focus area now that growth is behind us in terms of the numbers itself?
Absolutely. The stock will move the day the NIM start to recover. The market gets the sense of NIM starting to recover. And obviously, HDFC Bank needs to get away from the limelight and just focus on business, stable loan growth, stable deposit growth over the period of next 3 to 4 quarters without being in the news for all the wrong reasons would augur well for the stock price per se. So from my perspective, steady business, no noise, and I am recovery should be the mantra of the manager.
Aditya, from a seasonality standpoint, sometimes we see Q1 to be a quarter where HDFC Bank does slightly higher provisions. So therefore, that should not perturb the street at all. But what would you want to hear from the management in the commentary that should really ensure that it exudes confidence to the street? Because the street currently is not valuing HDFC Bank like it used to. Plenty of reasons why. What is it that the management can repair?
Simply accelerate the retail loan growth, accelerate the deposit growth. Those are the two biggest levers that the management has really got for NIMs to really recover. Obviously, if the NIMs move from 4% to about 3.38% on a more merged book, the profitability obviously would get a hit. HDB financials result were fairly okay. Nothing to complain about as such. But from my perspective, in the commentary, the street would like to see what are the levers for margin recovery. What does HDFC Bank guide for loan growth and deposit growth in FY27? And how stable is the top management? We've seen concerns over the period of last 6 months over the top management, and now Mr. Shashidhar Jagdishan is up for re-elect as well. So from my perspective, stability, business stability per se, and margin recovery are the three core points to look for HDFC.
Stay with us. I'm going to, analyze some of the other earnings expectations as well with you. But let me quickly bring on board Mitali once again to tell us what the ET Now poll is penciling in for both Axis as well as Kotak's numbers.
Right, okay, talking about Kotak Bank and Axis Bank. So the highlights for this season will be on the asset quality, the margin resilience, as well as the management commentary, as both these banks they navigate from a lower interest rate environment. Now, starting off with Kotak Mahindra Bank, the NII is expected to grow around 10% yearly, while their net profits could see a surge of around 21% on a yearly basis, aided by lower provisions for this particular quarter. However, the net interest margins are likely to moderate around 4.5 to 4.67 odd percentage in Q4. Reflecting deposit repricing and the impact of rate cuts. Asset quality it is expected to remain strong with their GNPA and NNPA levels expected to improve for this quarter. The streets will closely watch the management's outlook on NIM's trajectory, the credit cost, as well as the deposit repricing, along with the commentary on the macro environment and the impact on their current books. Now, moving to Axis Bank, the NII for Axis Bank it is expected to surge around 12% on a yearly basis, while the profit growth could exceed 20% on a yearly basis, supported by a sharp decline in the provisions for Axis Bank. However, the NIMs they're expected to soften further to around 3.5% as the lower rates and a higher share of the corporate lending they weigh heavy on the margins. The asset quality for the bank it is expected to remain stable, although the seasonal first quarter slippages will remain a key monitorable here. Investors will focus on the margin guidance, the growth outlook going ahead, as well as the retail demand. Management's what is the outlook there, as well as the funding costs and overall profitability going ahead for Axis Bank.
Aditya, I want to get you in on Kotak Bank because that traditionally tends to be the swing factor amidst all the banking majors. Do you expect Kotak's NIMs to hold, or could there be a real compression risk there?
So I don't think NIMs would be a problem for Kotak. I think given the lower slippages across all banks, Federal Bank just reported their numbers. Slippages there were also lower. So from my perspective, sector-wide, we are seeing slippages to be lower, and that will aid the NIMs as well. From my perspective, that is a plus point, particularly for Kotak Bank. It is really very nervous about how Ashok Vaswani is going away. A lot of his team will also go away. So who is going to lead Kotak? Any guidance on that? Any color on that? Would be one of the biggest positives for Kotak per se. So from my perspective, management is what I'm looking for Kotak Mahindra Bank.
Aditya, I mean, let me also bring on board Rajesh Palvia of Axis Securities into this conversation. Rajesh, I'll come to you in just a minute. Just carrying that point forward, Aditya, I'm just looking at the list of top management within Kotak right now, and Anup Saha really stands out. And he has been groomed by, of course, the Bajaj Finance management team, which obviously places good favor in terms of the Kotak succession planning if he were to be made or elevated at some point of time. Do you think that is one of the lowest hanging fruit and could well be something that the street takes favorably if it were to come through?
What is really happening in Kotak is ever since Mr. Kotak left, the Uday Kotak premium has deteriorated, and the market has not been able to trust somebody else in order to give the valuation that it did when Uday Kotak was there. So we've seen a serial derating of Kotak Mahindra Bank stock over the period of last 5 years. So from my perspective, what the market will see is a good leader and a good leader at least for the next 5 to 7 years, where the market understands what the strategy is, how the bank will control the NPAs, and what the growth would look like. So from my perspective, Anup Saha, and there are many others within Kotak who have the ability to lead Kotak, subject to the regulator approving this. So from my perspective, as I said, clarity is something is one of the biggest factors that will lead to stock price returns for Kotak, and that's what I will be looking for in the results tomorrow.
Aditya, I have to draw your attention to PNB and other PSU banks as well. And, the broader expectation is that they're likely to see relatively subdued growth as compared to their private peers. Would you say that this is just seasonal, or would you say that there is a structural gap, so to speak, now within what PSUs may deliver as opposed to the private banking majors?
No, I don't think that growth is a major challenge either for PSU banks or private banks. We've about 13% loan growth, which is fair enough given the size of Union Bank. From my perspective, loan growth will be pretty strong. Deposit growth is where a little bit of challenges. We saw Union Bank just report a 5% deposit growth. Still, brand for all PSU banks is really very strong, so that should not be a major hindrance from there for them for loan for deposit growth. And after that, slippages are at a multi-year low, so that should also not be a problem. What the major challenge for PSU banks as well as private bank is how long can they sustain this performance of very low NPAs and very good loan growth. At some point in time, this will break and NPAs will start to mount for all of these companies. So from my perspective, that is something to watch out for over the period of next 2 to 4 quarters. But all of these lenders right now are in a honeymoon phase where all of them will report spectacular set of numbers, and that is why we see most of the banks up today in fact.
Rajesh, what do you make of the moves today on some of these banks? Some very, very strong moves, right? 3% on Kotak. We're seeing some decent moves even on HDFC. And this is just prior to the earnings. My understanding was positioning had become a little light in some of these banks, but these moves seem to suggest that there's confidence.
Yeah, hi, good afternoon. Yeah, definitely. So, banking is a space where, we have seen, multiple time whenever there is a dip, there is a buying interest in last couple of trading session from the lower level. Looking at the kind of, buying interest ahead of earnings, I think it clearly shows that, the street is confident enough to get, better number in this quarterly earning from the banking space. And I think the way most of the stocks like be it Federal Bank, Kotak Bank, RBL Bank, all these banks, even IndusInd Bank, all these banks are showing sign of strength on their near-term, short-term structure. It clearly shows that traders are also confident to create more positions. Bank Nifty is clearly showing a sign of strength. So I think there is further room to continue further more upside in the banking basket as Bank Nifty has already broken out the supply zone of 58,200. So I think if it continues to trade above here, we may see furthermore short covering to play out in banking stocks. And if I go with the technical setup, I think Federal Bank would come on the top of this setup. In fact, the kind of buying interest which we are observing in the Federal Bank, we believe that 360, 370 would be the next target. But on the large cap bank, I think Kotak Bank is also managed to give breakout of falling channel on the daily chart. And looking at the negotiation at 20-day, 50-day moving average supply zone, I think any move beyond 395 can take this stock further higher to 410 to 415 also. So Kotak Bank is also showing sign of strength on the near-term chart. At this juncture, one can buy with a stop loss of 380.
Okay, understood. All right, and what's the call on the index now, Rajesh? This move looks very solid.
So Nifty managed to give breakout of last 5 days, tight range consolidation. So and already we have witnessed, short covering in from the call writers front. So call writers have shifted their position now towards 24,400, even 24,500 kind of strike. Put writers are looking more aggressive as they have building their position at 24,200 strike. So aggressive put writing at 24,200 and 300 strike is clearly giving us sign that base is now shifting higher, and the kind of short covering we have observed, especially in last half an hour of trade, we could see further higher trajectory 24,450, where we are projecting a target for Nifty. So trail your stop loss now towards 24,200 to hold the position. We could see another 150 point kind of up move in the indices. And as I already mentioned about Bank Nifty, if it's sustainable 58,200, so another up move towards 58,600 to 700, we could see for Bank Nifty also.
Draw your attention to Axis Bank, because historically it's always been a mixed bag when it comes to margins as well as the asset quality. What's your single biggest watch point when it comes to Axis's performance?
I think asset quality would be something that you would watch out for in Axis. It's been very turbulent over the period of last 4 quarters. In one of the quarters, they reported a one-time provision as well. So from my perspective, asset quality and stability in top management, there is a lot of churn. CFO from one bank is moving to another bank. That's how things are moving in all of these top banks. So from my perspective, NPAs as well as the stability in top management is something that I will look at in Axis Bank figure.
Aditya, I'm trying to understand, among these top 4 private sector banks, where is risk reward the best? Because ICICI has always been the one standout candidate in terms of earnings, always surprising on the upside. So, but also trades at a slightly premium valuation. If an investor were to position himself medium term, not from a result perspective, but medium term, where does risk reward look the best?
So there are a couple of aspects to it. Or if you look at growth stocks, if you're just purely looking from a growth perspective, or then SBI and ICICI Bank would be the top picks. At least 2 to 4 quarters still of this dream run for all of these lenders will continue. So from a growth perspective, those two will do extremely well. From a value perspective, Kotak and HDFC Bank will be the ones which you have to look out for. But both of them have their own unique challenges, as I said. HDFC Bank, too much in the limelight for all the wrong reasons, and the NIM problem that they've got. Kotak with respect to the management, as I said. So you have to categorize it that way. Only long-term investors who have the ability to stay in the stock for at least 3 to 5 years with small returns should invest in HDFC and Kotak. Otherwise, you should stick to ICICI Bank or an SBI.
Okay, Aditya, great to have you on the show as always, and we'll meet again once all these numbers are behind us to analyze. Good having you on the show. Okay, let's move on. JSW Steel just came out with its numbers, as did Havells. So we'll analyze both those numbers. There's something about Zepto IPO valuation as well. We'll address that. But look at a federal bank right now that's really shot up, and it's now holding on to a gain of about almost 6% after its numbers came in. Kalyan Jewellers, we've been talking about all through this week about this mega move on this stock. It's another 4.5% up in the green for Kalyan Jewellers. Look at Bharat Forge. And yes, Kotak Bank is going extremely strong into its earnings, a solid 3% of a move coming in there. GVT&D, Nalco, Power India, Polycab, KEI. That's where you're seeing red ticks in today's trading session. But Ashesha is here with that quick analysis on how JSW Steel's performance has been. Ashesha?
Well, yes, on the first look, it clearly looks better than what we were working with. Now, remember, on the top line front, a revenue figure that ET Now poll suggested stood at about 44,200 crores, and it has come in at a solid 47,370 crores. So it's a beat as far as revenue is concerned, and a solid 9% growth is what the company has reported on a year-on-year basis. EBITDA, meanwhile, at about 9,400 crores, again a beat as compared to ET Now poll of about 8,300 crores. Margins, meanwhile, have come in at 19.8% versus expectations of 18.8%, and we also have profit after tax, which has come in better than what the street was working with. Now remember, steel prices have risen on a sequential basis, and that is what aided numbers, at least on the top line front. Of course, volumes is something that we will have to watch out for. The company had already reported its production volume number earlier, and that reported flat growth on a sequential basis. So yes, volume is one internal that we will watch out for, but on the top line and the top four numbers suggest that it's a clear beat as compared to street expectations.
Ashesha, I mean, I remember having this small chat with you on JSW Steel, and you suggested that volume was much better than anticipated, which you just mentioned. If one were to adjust for volumes and prices have remained as is what you were suggesting, would you say that the beat versus what we were penciling in and not the consensus estimates, is this also a beat versus that, or would you say that it's largely in line with what we were speaking about earlier?
Yes. So Harsh, what had happened is the street was penciling in a volume decline this time around, but company later reported its production numbers, which were flat on a sequential basis, and hence if we compare the numbers with street expectations, it was anyway expected to be a beat as compared to street expectations, and that's how it has come in. Now it is difficult to quantify the extent of beat if we strip off the impact of production volume growth that the company reported after most of the consensus estimates came in. But for now, it looks like a good set, at least as compared to expectations, and the stock is also reacting positively.
Right. Okay. Thank you so much for that, Ashesha. Rajesh, JSW Steel on charts. Of course, we're seeing a bit of volatility last few minutes, but otherwise.
So after the corrective move, now stock is trying to make a base at around 1220 kind of zone, which is very important for this near-term setup. If at all stock breaks below 1220, 1215 level, I think we could see furthermore profit taking here. Stock is attempting to give breakout about 20-day moving average, which is placed at around 1240, 1250 zone. Any breakout about 1250 can take this stock further higher, but I think there is some volatility based on the number has just came. So I think let the volatility to settle down. The levels to watch is 1215 on the downside and 1250 on the higher side. Either side breakout or breakdown will decide the major direction.
Right. Okay. Zepto IPO, that's also the big talking point this afternoon, and it seems that it could be facing a hurdle as the street is now concerned over its valuations amid rising competition and questions over profitability as well. Snehi is here to tell us what exactly is the update on its street debut.
Well, absolutely. So if you take a look at all the buzz around the Zepto IPO, basis the latest fundraising that Zepto had secured from Motilal Oswal and some other participants back in October of 2025, that fundraising to the tune of $450 million valued the company at north of $7 billion. What we are now understanding from Bloomberg is that Zepto is seeking a valuation for its IPO much below the $7 billion level, and there are concerns about the cash burn that the company is doing, and that has slightly tempered the optimism that was prevailing on the street around this IPO. Sources have told Bloomberg that foreign investors have indicated an interest at a pre-money valuation of just $4.5 billion, and some domestic institutional investors are valuing the company anywhere between $3 to $3.5 billion. If you compare it with that $7 billion valuation where the fundraising took place, this is exactly half from there. So we can expect to look at a reduction in the size of the IPO or lower subscription levels than compared to earlier on the institutional side. So that $450 million amount, the investors were General Catalyst and CalPERS, and this valued the company at around $7.3 billion. Basis this valuation, the math that we had done back of the envelope calculation indicated that Zepto's implied market cap on listing at 52.5 rupees per share would give it a market cap of 73,108 rupees. What we are understanding is that the shares of Zepto are currently in the unlisted space trading at 39 rupees a share, and that is giving the company a market cap of just 49,200 crores. That's a sharp correction of about 25% from where we were penciling in the market cap of Zepto to be as and when it listed. Just to bring you up to speed, it's a fresh issue plus OFS combination IPO. Fresh issue worth 8,110 crores, OFS up to 11.34 crore shares, wherein the promoters Adit Palisha and Cavalier Vora, they are not selling any stake. So that's the latest on Zepto, and yes, we're expecting to see a valuation trim down basis whatever we are picking up from agencies.
Okay, thank you for that, Sneh. Rajesh, very quickly, I want to quiz you on the two competitors of Zepto, both Eternal as well as Swiggy. Swiggy, in fact, both stocks have rallied very well last 3 months, but there's been over the last maybe a couple of weeks, you've seen a sharp outperformance in Swiggy versus Eternal. Talk to us about how both of these are looking on charts. How should one play it?
So definitely both stock have done well in last couple of week. If I go with the Swiggy structure, Swiggy was in downtrend, but the kind of buying interest which we have observed from the lower level, stock managed to give breakout of falling channel on a weekly chart and sustaining about to the breakout level. Looking at the strength on the near-term chart, we believe that if it's sustained above 270 mark, I think another leg of up move we could witness in near-term perspective, possible upside towards 285, 290, we may see on the near-term perspective. But Eternal is also showing sign of strength. This is the fourth consecutive month where stock is, making a higher ILO formation. So that's the sign of sustained buying action taking place in this counter also. So I think Eternal structure is slightly better if I compare with the medium-term structure for both the stock. So Eternal may extend its gain. 300 to 310 would be the next target. Buy and accumulate would be the strategy. Those who are positional trader, they can buy and accumulate. On the downside. 270 needs to keep as a stop loss.
Okay, on that note, let's take a very quick break. When we come back, we'll continue our market discussion with Rajesh Palveya. Well, it's going to be a very packed weekend, not just in terms of earnings, but a lot of other activities outside the equity markets and the business world. And Christopher Nolan's The Odyssey is off to a flying start at the Indian box office. In fact, the epic has reportedly sold 1.4 lakh advance tickets across PVR INOX and Cinepolis for day one, generating almost 8 crore rupees in advance collections. Now, while that's below Oppenheimer's 2 lakh ticket pre-sales, pricier tickets, some as high as 3,400 rupees per ticket, have also pushed collections ahead of Nolan's previous blockbuster, that's Oppenheimer. Now, trade estimates peg the opening at up to 18 crore rupees net, with gross collections likely to approach 20 crores. In fact, Nolan's mythic action epic follows the legendary king of Ithaca on a treacherous 10-year voyage back to his family after the Trojan War. It is tracking a $200 million global debut already. In fact, my colleague Times Network's Rudrani Chaturaj caught up with the A-team of the production during its premiere here in Mumbai.
I think it was the scale. Being a part of something so big that was all practical, when you see 1,000 people in an army, there is 1,000 people on that beach. When we're hiking up mountains or in the middle of nowhere, we really are in those places. And for me to be a part of something like that was a dream come true.
Well, that's always been the story with Odysseus. He's a very complicated character. He doesn't always make the right choices. And Chris's screenplay was really exceptional. And it was pretty clear, I think, to all of the actors what we needed to do. Chris gives you such freedom in creating your role. He's just such a good actor's director and gave us a really good screenplay to work with.
I enjoy the process of adaptation. And Homer's original poem has fascinated generations for thousands of years. So just on that basis, it's like you trust that there's resonance for a modern world if you can adapt it in a way that you care about. Hopefully, the other people will relate.
Well, surely looking forward to that one. Aisha, are you into history?
Not into history, but Christopher Nolan for sure.
Who
After
is it?
Oppenheimer, would love to see what Odyssey has in store for us.
The other thing is, at least with me, this happens. You have to watch his movie twice.
To understand?
Once doesn't really cut it out.
It happens to most.
All right. So viewers, but it's a packed weekend because you've got the FIFA World Cup final as well. And therefore plenty to look out for. And also you've got all of those banking earnings. In fact, Siddharth Khemka joining us from Motilal Oswal. Great having you here, Siddharth. It's been a while. Give us a sense, how is the earnings trajectory coming along? Anything that's standing out in terms of the numbers that have come through, in terms of the commentary that has come through? Give us a sense.
Hi, good afternoon, Harsh. Yes, I think if you look at the Q1 numbers so far, I think has ticked the right boxes so far. I think numbers are in line to marginally better than expectations, especially in two large sectors. The IT sector, which has largely announced numbers. Banking, which will be, I think Saturday is the banking day for Indian markets. Bulk of 5 banks will be reporting numbers, but Federal just reported numbers, and I think again ahead of expectations. If you look at IT, the key factor that has come out clearly is that management commentary across most of the large tier 1 companies have said that Q2 should be better than Q1. So I think clearly this lays the foundation that the worst is getting over and things are improving. Now, how much time they will take to recover fully, I think that time will only tell. I think at least 2 to 3 more quarters. But margins have been better than expectations, and I think one stock that clearly stood out was Tech Mahindra. So coming out with numbers today, but more importantly, the management sounding pretty confident about upgrading the full year's revenue growth guidance. So I think that along with the overall sustainability in terms of growth, margins, 11th consecutive quarter of margin improvement, plus the management guidance of a 15% EBIT exit run rate by end of this financial year. So pretty strong views coming in there. In terms of, I think, holding wise also, IT has been largely underweight across some of the funds as well as brokerage houses. And this is where I think, at least in the near term, a short-term play can be there in IT given the good results, commentary, and expectation of improvement in Q2.
Right. Okay. That's the expectation on the overall market. Just looking at some of the earnings contenders, look at a Reliance going very strong into its numbers later this evening, 2% higher for Reliance Industries as we speak. Having said that, if you just look at the price of the share, it's been stuck in this band for almost 3 years now. Even at 1300 plus levels, it's still pretty much within that band. Siddharth, what's the expectation from Reliance this time?
Aisha, hi, good afternoon. I think finally we'll see some improvement in Reliance numbers. What we are expecting is consolidated EBITDA to grow about 8%. Even for the standalone business, EBITDA is expected to go up by about 12%. For some of its other businesses, for example, Reliance Jio, it is expected to go up by 13%. And the retail business is still expected to be largely flattish, about 4%. And I think overall, as we see, finally, among the other triggers, the key trigger that remains is the IPO for RGO, which could kind of unlock value for the platform as well as the telecom business. And I think that would be a key near-term trigger. But nonetheless, expecting improvement in Reliance numbers, which should help the stock price as well.
Okay, let me bring on board, in fact, Lakshmikant Shukla to give us a chart check. He's from Yes Securities. Give us a chart check on Reliance, Lakshmikant.
Yeah, good afternoon to you all. So Reliance has witnessing some sort of recovery after taking support from the levels of 1,290 But still, I would say that hurdle still plays around the zone of 1,350. It is its previous swing high. So until it surpasses this level, I think we will see more consolidation. But if in any case, if it surpasses this level of 1,250, then after it will regain upside momentum, and we will see further bullish momentum toward the levels of 1,400. So till then, it trade below these levels. I think we will see further consolidation in Reliance.
Okay, the other big event this weekend is going to be, of course, the FIFA World Cup final. And after weeks of fierce competition, only two teams remain, Argentina and Spain, and are now set to battle for the World Cup trophy in what promises to be a really blockbuster final. Shaurya joins us with a closer look at the key battles that could decide who lifts the World Cup.
Yes, Harsh, the biggest game of this year and biggest football game of this year is going to be here. It is going to be Spain versus Argentina. This is one of the biggest match that is going to happen. Defending champions versus the most complete team. And one side has Lionel Messi and another has the wonderkind Lamine Yamal. If we talk about the key battles are going to be not just in the attacking front, not just in the defending front, but it is going to be the midfield that is going to decide the game. And the two big players there are going to be Rodri and Enzo Fernandez. I mean, fun fact, they both play in the same league, which is Premier League, while Enzo Fernandez plays for Chelsea and Rodri plays for Man City. Both the teams have a very defensive tactics. While if we look at their stats, it is not even because Enzo Fernandez is an attacking midfielder. But if we look at their main and the most key stat, their pass accuracy, I mean, here Rodri is winning. And this is what Spain has. Spain is a defending force. But what Argentina possess is the legend. It is Lionel Messi. And the key battle there is going to be between the master and the one who was taught by him. It is going to be Lamine Yamal versus Lionel Messi. And while Messi has had a stellar tournament, 8 goals, and he's leading the Golden Boot race, Lamine Yamal has to catch up. Just 1 goal. Not a great season for him with his goals. But one thing that we have to look into is pass accuracy here as well. 42% for Lionel Messi and 58% for Lamine Yamal. He is better in the midfield. He can make the right passes, and right passes make goals. So these are the key battles we have to watch out for, and it is going to be a stellar final and a stellar night in New York for this final.
Thank you for that, Shaurya. Looking very good, looking very excited, and understandably so. The other piece is that Argentina have come back in 3 games from being at least 1-0 down. And therefore, they'll take a lot of confidence into the final, even if they were to go down a goal. And that really stands out, especially when the nerves are quick, given that this is a big, big tournament. And of course, second consecutive World Cup win if Argentina were to come through. Who are you rooting for? Are you rooting for any of them?
You got me totally
completely off guard.
But yeah, Argentina.
Yeah?
You?
Spain.
Okay.
Let's see. Siddharth, are you rooting for any of the teams?
Yeah, Harsh, I think while the heart goes out for Spain, the underdogs, but I think the mind still favors Argentina.
I in fact spelled it out. I kind of reasoned that through while Shaurya was giving those stats. Lakshmikant, what's your take?
So I'm not a great fan of football, but I'll go with Argentina due to that Lionel Messi.
Ah, that's true. Okay. All right. Some movers, of course, in trade, and one of those is Polycab. Havells also came out with numbers, in fact. And Siddharth, do you have a view on the numbers of both Polycab and Havells? How is it looking? Cables and wires as a segment is looking weaker this time around, right?
Yeah, Harsh, I think Polycab overall numbers were in line with our expectations. The cables and wires revenue growth was in line. FMEG segment was something which did very well. So consumption, if you look at consumer durables across the sector, that has done well. The key challenge was the raw material volatility, the commodity prices that is impacting margins, and I think that is where the Havels, the first cut that we are seeing is there is a miss in estimates largely due to decline in margins across all segments. And Havels has another added pressure of Lloyd's, where we are seeing the losses have widened. So clearly, I think overall we believe while the sector has done well, the demand environment is pretty strong for the wires and cables led by infra, housing, some of the telecom space, and now the AI data center that is also helping push the demand. So near term, the commodity volatility could kind of put the sector in consolidation for some time, but we clearly like this sector from a long-term perspective. Our preferred picks there is Polycab, followed by KEI. Recently, we also upgraded RR Cable from a neutral to buy rating. So clearly, from a one-year perspective, we like the sector, bearing the near-term consolidation due to the commodity volatility.
Okay. All right. On charts, Lakshmikant, let me quickly take a chart check. KEI, Polycab, Havels, what's the take?
See, if we look at the structure of Polycab, so today it has given rising trend line breakdown with the formation of bearish candle, but I think it is trading near its previous key support levels of 8800. So I think that would be the good support to watch out for this Polycab. If it retain well, then we will see bounce back move. And if we look at the structure of KEI, so KEI again showing a bearish kind of momentum with the formation of bearish belt hold candlestick pattern, and it has also slipped below its 100-day SMA. So I think some more correction is possible in KEI toward the levels of 4,750 to 4,780 kind of range. So we could see some sort of bounce back in Polycab, but in KEI, I think some more correction is possible toward the levels of 4,800.
Since we're talking about this entire space, Polycab is taking a knock despite a strong first quarter show. Brokerages are also constructive and have raised their target prices following the earnings. Rabinda joins in to explain why the fall then in the stock.
Well, yes, yesterday during market hours, Polycab reported its Q1 FY27 earnings, and company reported very good set of number above the street estimate. And in Q1 FY27, company's revenue grew by 39% on a yearly basis, and this performance was driven by strong execution in both wires and cables and FMEG business. And management in the con call has reiterated that long-term growth guidance under the Project Spring roadmap. The company continued to target wires and cables EBITDA margin between 11 to 13% and aims to grow at 1.5 times the industry growth. And the FMEG business is targeting a bit margin of 8 to 10% by FY30. And on the export front, management the con call say that they remain optimistic about the export outlook, citing a healthy order book and a strong inquiry pipeline from the US, which is expected to drive a meaningful pickup in the coming quarters. And after that, brokerages has come out with a note, and many brokerages has hiked their target prices. Nuvama has maintained that buy rating and hiked target price rupees 10,510, and PL Capital has also upgraded the stock. And apart from this, Jefferies, Citi, HSBC has also maintained the buy rating, and they have hiked the target price. But despite this strong earnings, positive management commentary, and target price rise in brokerages, despite the stock is under pressure, and the decline was primarily due to concern around the slower operational momentum. Export revenue declined at about 13% on a yearly basis amid geopolitical uncertainty, although management indicated that demand has started recovering, and wires and cables volume remained in the low to mid single digit because of the high base in Q1 of FY26. And on the EPC front, EPC revenue declined to 11% on a yearly basis due to milestone based project execution and revenue recognition, while international business also registered degrowth of 13% on a yearly basis. And additionally, a sharp 20% correction in aluminum prices during June resulted in a lower than normal channel stocking as dealer delayed purchase in the anticipation of further price declines. And lastly, investors also remain mindful that the Polycab continues to trade at a premium valuation as compared to the industry PE. So back of all these reasons, stock is under pressure in today's session.
Okay. Thank you for that, Ravinder. Some other stocks which seem to be under pressure. In fact, broader markets in general continue to be weighed down. It's essentially some of the heavyweights which are contributing to the Nifty index. And that's been the case for a better part since the morning, but more so now. You can see the accentuation there. SIAT is the other one where there's pressure. Lakshmikant, is there a view you have with regard to SIAT? 7.25% lower, has been that way since the start of the day.
Fiat Limited has seen a gap down opening today's sessions, but it has also seen some sort of recovery after taking support from its long-term moving averages. So I think if it sustained well above the levels of 3,650, where its 200 DMS stand, so I think from there we could see some more pullback move in this stock. So one should wait for this breakthrough above the levels of 3,650 and can go long. Keep the stop loss of 3,480. So from there we could see some good risk reward ratio. But if it surpasses this level, we will see bullish momentum toward the levels of 3,860 to 3,900 zone.
Right. Okay, another exclusive then, and we understand from our sources that the Power Ministry has initiated interministerial consultations on an underground cable manufacturing scheme. In fact, the industry consultations are done and the scheme has gained momentum. Prakash is here with more details on the same.
Well, that's an important development that the government sources tell us that the Power Ministry has initiated interministerial consultation on an underground cable manufacturing scheme, a very significant development. In fact, the government plans a VGF scheme to boost underground cable manufacturing. The Central Electricity Authority has prepared a proposal. In fact, the process has been initiated. The government is planning to expand underground cable manufacturing by providing incentives to companies. Incentives would be provided based on manufacturing capacity. In fact, industry consultations have already been completed, and sources tell us that the overall financial outlay could be around rupees 10,000 crore. In fact, the scheme is likely to be sent to the Indian Cabinet within the next 2 months. A very significant development coming in. In fact, not only providing financial incentives on manufacturing, in fact, the government is also planning to supply surplus renewable power to various countries through underground cables. In fact, countries including Sri Lanka, Singapore, Myanmar could be connected through underground cables. In fact, government is planning to evacuate surplus power, and surplus power could be transmitted through these underground cables to various countries. In fact, renewable energy evacuation from various states is one of the key objectives of this scheme. Solar power developers are being forced to curtail generation by up to 50% in some cases due to lack of transmission infrastructure. Therefore, the process has been initiated. Government is not only planning to enhance domestic manufacturing capacity, but also planning to transmit surplus power to various countries. Back to you.
Okay, thank you so much for that, Prakash. Let me go across to Ashesha. She's standing by with what to expect from Reliance and Jio's numbers.
Well, yes, we are expecting steady set of numbers from big boy Reliance Industries this time around, and all sectors are expected to report steady growth on a sequential basis, barring the oil and gas segment, where we are expecting production to decline, and that could weigh heavy on the EBITDA of oil and gas segment this time around. Let's talk about numbers first, and consolidated revenue is expected to come in at about 2,98,700 crores, which will be an increase of 2% on a sequential basis, and EBITDA is expected to see a jump up of about 5% on a quarter-on-quarter basis. Let's talk about segments one by one, and let's first start with the oil to chemicals business. And over here, we are expecting strong set of numbers. Remember, GRMs were on the higher side on a sequential basis, and that is likely to aid oil to chemical business EBITDA. In fact, O2C EBITDA is expected to jump up by about 15 to 18%, both on a sequential and on a year-on-year basis. Meanwhile, as far as oil and gas segment is concerned, as I mentioned, EBITDA EBITDA could decline by about 11 to 12% YOY, and this is on account of lower production from KG36 gas production site that we are expecting this time around. Meanwhile, as far as the retail segment is concerned, over here EBITDA is expected to rise marginally by about 4 to 7% YOY. Now remember, over here we are expecting a sequential decline for retail segment EBITDA of about 2 to 3%, and this is on account of scale up of hyperlocal deliveries, which is likely to weigh heavy on retail segment performance. But all in all, we are expecting steady set of numbers from Reliance this time around. Retail is expected to report a marginal growth. Oil to chemical business is expected to report very strong growth this time around, although oil and gas could see some bit of decline this time around, but on a consolidated basis, 2% growth on revenue and about 5% growth on EBITDA is what we are penciling in. Well, yes, we are expecting steady numbers from Reliance Jio as well this time around ahead of its IPO, which is set to be done over the next few months. First up, let's talk about the numbers, where Jio's revenue is expected to come in at about 34,200 crores, an increase of 2% on a sequential basis, while EBITDA could also see a jump up of about 3% on a quarter-on-quarter basis. Let's talk about internals then. ARPUs, the average revenue per user, could come in at about 215 rupees per unit, up marginally from 214 that the company had reported in the previous quarter. Now remember, one of the reasons of increase in ARPU will be subscriber additions, but second is the additional 1 day that we had in this quarter versus fourth quarter of FY26. Meanwhile, as far as customer addition is concerned, we are expecting net subscriber addition of about 8.7 millions in the first quarter of FY27. But for Jio, any kind of commentary on valuation, on the exact timing of listing and regulatory clearances for its listing will be very crucial, but steady set of numbers expected from Reliance Jio as well.
Okay, steady set from Reliance Jio for sure. But just taking a look at what's happening within banks, and it's a massive flare-up. And no, it's not just restricted to Federal Bank. Look at some of the private banking, large banking names which are due for their numbers tomorrow. Kotak, Axis, ICICI Bank, and even in HDFC Bank. They're all flaring up very, very smartly in trade. HDFC Bank now sitting on a 1% gain, almost a 2% notch up for ICICI Bank. Axis higher by 2%. Kotak is now up a good 3.5% as we speak. Lakshmikant, let's revisit the charts of these four banking majors which are due for their numbers tomorrow, and what's looking like a good buy at these levels after the perk up today.
In our sense, I think that ICICI Bank and HDFC Bank are looking good on the chart. Recently, ICICI Bank has given falling trend line breakout on the daily chart, and it has also, I think, a few times left. So I think it has also closed above these levels. So we expect that positive momentum will continue in ICICI Bank, and we will soon see further upside move toward the levels of on the upside. If we talk about already it has given bullish momentum, so we expect 1,520 level in ICICI Banks with the stop loss of 1,420 on the downside. While if we look at the chart of HDFC Bank, so HDFC Bank has also seen given a good pull up move from the recent sessions, and now if it break the hurdle of 840 to 845, then we will see bullish momentum in HDFC Bank toward the levels of 850 to 860 kind of range. So I think both these ICICI and HDFC banks looks positive, and one can initiate long position. However, if you look at the chart of Kotak Bank and Axis, they are still facing hurdle from its long-term moving averages. And although in today's session we have seen a good move in Kotak Mahindra as well ICICI Bank, but overall structure is still tilted on the negative side. So for Kotak Mahindra, it need to sustain above the levels of 400. From there, it will able to retain its bullish momentum toward the levels of 420 kind of range. And if we look at the structure of ICICI Bank, so again it need to hold its lower level of previous swing low, and then after we will see positive momentum. For that, it need to cross the hurdle of 1,350. Then after we will see a bullish up kind move toward the levels of 1,400. But if one want to take long position, then ICICI Bank and HDFC Bank are far more better bets.
Okay, Siddharth, very quickly, Federal's numbers. Margins came in at 3.33%, much ahead of estimates. Slippage is also controlled. But the 7% spike up in stock, that's what really surprises. Your sense?
So yeah, Harsh, I think the first among the private bank results to come in pretty ahead beat on expectations. NIMs improves about 13 basis points, and asset quality slippages that too improved. So I think overall pretty strong numbers from Federal Bank. This stock has been consistently doing well, and with these kind of numbers, if you see, I think that's one mid-sized bank which is outperforming with the valuations. I think still comfortable. Compared to some of these, for example, in AU, which trades at 3.5 times, and some of the other smaller banks which are growing faster. So I think with around 1.9 times, we see still room for upside in Federal and the kind of outperformance that they are showing. So this year, Federal is among our preferred ideas in the mid-sized private sector banks, followed by something like an AU Small Finance Bank, and then an RBL, where we are seeing a new management steering the growth path ahead.
Right, okay. Siddharth, great to have you today on the show. Lakshmikant, we'll let you go on that note as well. Just winding up for the week, and let's take stock of how over the week the markets have panned out and where is it that we're shutting shop. For today, of course, we've managed to eke out good gains for ourselves amidst all the global weakness which is transpiring, and it's a little bit scary how the Wall Street futures are currently as we speak right now. But for us, of course, we've managed to cling on and build on to that 24,000 mark, closing in with a solid 200-point gain, 24,300 for the Nifty futures. And time and again, we've seen the market or the index test that 24K mark through this week, but we are managing to close in at the high point of the week. For today, it's been technology and banks which have really led and contributed maximum to today's move. So TechM, Kotak Bank, Jio Financials, TCS, HCL Technologies, Reliance Industries, Axis, ICICI Bank, they've all been the steady movers. The breadth of the market couldn't quite recover even towards the fag end. Power India, Nalco, GVT&D, Polycap, Patanjali were all drags. But on the flip side, there were gains for an Exide, for a Bharat Forge, for a Kalyan Jewellers, and then Federal Bank, which has got to be the top performer today with a near about 6.5% up move and a tad above that. Kalyan Jewellers, of course, has been the star through this week. Another 4.6% added along with it in today's session as well.
Well, yes, earnings, of course, in focus now. Firmly, we're into the earnings season. 7% move on Federal Bank on the back of numbers. Global Spirits down 6% on the back of numbers. JSW Steel, extremely strong set of numbers. Stock perked up 1% or thereabouts. Havells, weak numbers, 1.5% lower on Havells. Central Bank also came out with numbers, 3% lower on Central Bank on the back of the numbers that have come through. Outside of that, you again got some earnings which came to us overnight, and CEAT was the big mover there, and the top loser on the Nifty 500 index, 7.25% lower. WeWork, we spoke with management as well, 7% lower on that one. As a result of the knock on CEAT, you saw JK and Balakrishna also fall. You saw 3.5 to 4% in terms of the knock on both of those stocks. Piramal Finance was the other one, 2.5% lower despite a very good set of numbers. So you got some decent tilt in terms of the numbers, but not exactly the best reaction. Tech Mahindra was the top performer here, 4% higher, and it took and carried with it the entire IT index. 4% higher on Tech Mahindra, nearly 2% higher on the IT index itself. JioFin was the other one, 3% higher, and 361, again, decent set of numbers, 2.8 odd % in terms of the move on JioFin. But with that, completely timed out on this edition of Closing Trades from Aisha, myself, everyone who puts this show together. Thanks so much for watching. Hope you have a happening weekend. It's a long one, both from a markets perspective, but also from Odyssey as well as the FIFA World Cup. Have a good one.